Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, guys. Let's take a look again at euro currency. As you can see, the suggestion that we have made that probably the breakout should happen, as market yesterday has shown the early sign of the bullish background, because you know from the classic technical analysis, when the market turns in the opposite direction before it reached the opposite border of some consolidation of the or pattern, for example, it could be rectangle, triangle. In our case, this is the sideways action. It becomes the first early sign of the possible breakout, and that has happened. So you can see market currently, well, not too far, but still it stands around the upper range of the confidence resistance. It's 1020. Now it's trading right at this level. COP, not quite, but almost reaching, just the 5 pips till the COP target. And here market now takes some breath after this rally. In general, the news in Europe was moderately positive because I'll show you, as you can see, Euro Commission proposed a economic recovery package worth of the total 1.85 trillion euros. So that's even more than initially was suggested by Franco-German agreement. Now, France financial minister said that it probably could be more. So now, as they talk about the additional 750 billion euros. So in general, we see that this heavy train of the support measures starts to move finally in Europe, because it long time stand without any motion, and while the United States aggressively have financed their economy to support in Europe, it was really, well, too slow, long delay action, and currently it finally starts to move. So that has led to this action that we see on a daily. Currently, in today's session, probably we could get some pullback reaction on the resistance, because guys, actually here it's a bit tricky moment, since well, that's agreement at the confidence. This is a strong level. The market has to break it up. Now is a major question whether it will have enough power to do this. Anyway, some reaction here, some pullback here probably should happen. For us, the major term is to see how deep this retracement will be. And today we appoint the crucial levels to keep an eye on. And we try to estimate the invalidation point of the bullish context today. On the 4-hour time frame chart, everything seems good. So market has shown the breakout, it's coming higher. Our cluster target stands 1060, 11 even approximately. So first, this is wide ABCD patch, and also we have butterflies. Here is a butterfly that I do not draw, but I use this target of this extension. Here it stands, and also 1618 butterfly of this target of this minor butterfly. It also stands around 1090, 111 area. So that's approximately the target. And whether the market will complete it or not, it will depend on how market will behave here. This divergence we do not need anymore because it's completed. This market has created the new top. So let's see what we will keep an eye on hourly chart. Here is how reversal has happened. Actually, guys, that has happened precisely at the XLP, this minor ABCD pattern, if you remember, in the conference support. And we said, as I said, that's my preferable way to act. Buy here, then move stop to the break-even and see what will happen. And that has worked because, well, it's just easier to buy at both support levels if you do not know where the market particularly could turn up, but you are sure with the bullish context. It's better to split your position and buy at both levels that you have set for your potential entry. And yesterday action is example why this is useful. First of all, because this is easier, and second, you do not know what particular could happen in the moment. So who could foresee that particularly these moments will be news release on these new measures from the European Union Commission? Nobody could tell. But that has happened. And technical analysis has foreseen that actually with a strong support there where the potential reversal could happen. So anyway, we have the action. Now you could move stuff to the break-even. Those of you who have longs, what we have more deep retracement after that, return rate back up, so volatility, creating new top here, and market now stands in response. So in fact, we stand at the COP resistance and around the major conference level. The positive sign is that market stands tight. So take a look at the follow time frame chart, by far at least. As you can see, tight consolidation right around the top, right around the above the conference. So this is a good sign. If market will just immediately drop down, that would be much worse price action. But here, on the fact that market jumped up and calling around the previous top, holding strongly around the COP target and around the conference, this is good. This is a bullish moment. So I would suggest that if you still would like to take the long position, although the potential is not really very significant, but still, well, maybe not as small as it seems. It's approximately 100 pips. So you could consider two levels, this one and this one, for a possible buy. Maybe this will be Gartner's T+2 buy pattern could be formed. Maybe some other pattern could be formed. But the one thing that we can't accept is the erasing of this rally. So once market return back down and drop below this level, erasing this fast reversal candle, that will be very negative. Because not because of just erasing of that, although this is major point, but also if we'll take a look at the follow time frame chart, the daily chart, erasing of this candle, guys, it will mean that market first drop below the conference, again, drop below the previous tops that already have been broken. So it will be kind of the Russian greens type of action, so fake breakout. And also market will drop below middle of the range again. So that will be a very bearish moment. That we can't accept anyway. And from that standpoint, it makes easier, and actually you have only one possible for position taking if you consider taking the long position. Keep an eye on these levels. Maybe some pattern will be formed, as I said. That's your invalidation point where it stops below these lows. That's initially the trade that we could consider. For bears, it's of course quite opposite scenario. So do nothing and wait when the market will erase this bullish context, or wait for some other bearish signs that could be formed later, maybe on next week. So currently we do not see a clear bearish context. Context in general stands bullish, and we today will be watching for two levels, 109.95 and 109.70 conference support.